She can give us a wrap up of the fundamentals for the week, and when she's done, I'll go over the technicals for the week. It's all yours, Carmen.
Okay. Um, so just to prove a point about how cool Fridays can be, I just took a screenshot so anybody that comes in after this, oh well, they missed it. So I'm gonna send everybody who's on the Zoom call right now, minus Mr. Levels and myself. So six of y'all. I'm gonna send y'all some questions. I'm gonna send them to you like in a private message on um Telegram, and it's stock related. So what I want to get you guys in the habit of doing is just kind of like doing some very elementary level, like basic research. And anytime you're putting a company into your stock portfolio, I want you to go through these initial questions. They're very easy. I promise they're not hard, but I want you guys to just like start looking at these questions, getting yourself in the frame of mind of, how to actually go about researching companies, picking the right companies to put in your portfolio. If by the end of next week, so you'll get a whole week, um, you know, I'll say next Saturday. Next Saturday, if you send me the questions back. And let's say like, you get to one, you have issues trying to find it, do the best you can with answering it. I just want to see effort. If you send the questions back to me by next Saturday, I'll send you something. So there you go. Six of y'all. You're the only ones getting the questions. You're the only one that's going to get the opportunity. You're going to see it first. Everybody else is going to get it after the fact. So there you go. That's my gift to you. Um, so I want you guys to start working on that. I'll send you the questions after the call. So I'm on my phone, so I'm not going to share my screen. Um, but I'm just going to talk through what happened this week, and then I'm going to also talk about next week, because next week is a really important week in the financial market. So just kind of looking back over this week, we had very mixed news. Um, the retail sales news that came out on Tuesday was actually not as great as it should have been. So we'll just keep an eye on spending. What these numbers show is that people weren't actually spending as much money um, in in July compared to June. And when you start looking at the news and what actually happened during that time period, this is when people, this is when we started talking about the Delta variant and things possibly taking a turn, going back to what they were like last year. So a lot of people started getting fearful. This is where you start to see some of the fear in the market. Jerome Powell had a speech. I'm not actually going to cover his speech and talking about this week. I'm actually going to talk about it in covering next week's news. Um, New Zealand actually did something that was not really expected. They actually changed their cash rate. Um, and the changing of their cash rate actually shows and goes back to kind of validate some of the stuff that happened in the U.S. markets, where countries are starting to get a little bit fearful now. I put a message in the group chat earlier today saying that, the China markets are in a bear market right now. A lot of countries are starting to get really fearful about what the Delta variant could actually do. So some of this on New Zealand's part is actually preemptive, in my opinion. I don't feel like their economy is in such a bad place that they just needed to lower their rates, but this will actually help to give them a cushion going forward. And then they had a policy statement, a rate statement. They did a press conference and all of that stuff concerning their rates and stuff. COVID and the global markets were actually part of the reason for why they stated that they were going to, they made the change. Consumer price index news for Canada came out on Wednesday. It was pretty consistent with what it was like here in the US. inflation is pretty much what this news is summing up. Prices went up. Crude oil inventories, oil came out of the reserves. We had Fed minutes. We had Australian employment news that came out. It was actually really good. They expected to lose jobs, but they actually gained jobs, and their unemployment rate went down, which is another reason why I feel like New Zealand's move is kind of preemptive, because New Zealand, Australia have very, very closely tied economies. So it's like New Zealand is kind of like the little sibling compared to Australia. So I just feel like what New Zealand's doing there again is protective. The Philly Fed manufacturing news wasn't great. And then we had pretty good numbers when it came to unemployment. They were relatively close because it was like within about 10% or so. So that's still pretty close to what the forecast was. However, it was still better than forecast. One thing I want you guys to start looking at when it comes to, like, we start talking about the Delta variant and all these different things going on, manufacturing is going to be really important. So whenever we start looking at things in different areas for manufacturing, the same companies that were having issues with supplies last year, pay attention to those companies. Also, pay attention to the companies that make vaccines and that make the test. One company in particular, Abbott. So they were making the test. They were one of the largest companies out there making the test to actually test people for the coronavirus. They trashed a lot of tests and materials to make the test. The demand dropped because the push was for people to get vaccinated. So as people got vaccinated, and less testing was done, they started getting rid of the raw materials and a lot of the tests that they had stored because they felt like they weren't going to be needed. Well, guess what? Now we need those tests, and now they're having a hard time coming up with the materials and getting the tests out to meet the demand that's there. So pay attention to little things like that. It might not necessarily affect your portfolio if you're not holding the company, but from an economic standpoint, if people aren't able to get tested for the Delta variant, and they know now that people who have been vaccinated can get and carry the Delta variant, then it's going to become an issue of, do we go into a lockdown type sort of situation? Do the kids go back to virtual, classrooms until we're able to get more tests out? So those are the types of things that could potentially play out if the manufacturing schedule for tests don't actually play out and get fulfilled the way that they should. And then let's see what else. Friday or today we had retail sales for GDP. Also, we had retail sales for Canada. The retail sales for the UK played out pretty much like they did here in the United States. They were off. And then core retail sales for Canada were actually pretty good, which that doesn't really surprise me considering the materials that Canada manufactures, the materials that they make, and then just their economy, period. Like their citizens right now are not quite as fearful because their media isn't as negative, and then also a lot of the things that they have going on in their country are just more positive right now than the United States. All right, so next week, I'm just going to sum up next week very, very quickly. Monday, it's a lot of manufacturing and services news for Europe and the United States. Wednesday, we get economic business climate news. A lot of it is going to be coming out of Europe. And then we get durable good orders, which are long-term items that people typically only purchase like once every 5 to 10 years. So like cars, furniture, heavy items. those types of orders, as well as manufacturers of those orders. That's what's coming out Wednesday, as well as crude oil inventories. Now, Thursday and Friday, remember when I said I was going to talk about Jerome Powell this week? This is why. Next Thursday starts Jackson Hole. I put a message in the group chat stating earlier that, now the Fed is starting to realize, or they're starting to be affected now by the Delta variant. Jackson Hole is a symposium. It's a group. It's a meeting where like the who's who of the financial world. I mean, like top-notch statisticians, economists, your Fed chairs, your Fed presidents, your CEOs, like your CFOs, all those people are at this meeting. Like the who's who of money go to this symposium. It was supposed to be in person. They announced today that it was not going to be in person after everybody had bought tickets and booked hotel rooms and stuff. It's now going to be virtual. It's going to be online now. Jerome Powell had already planned to not go in person. His portion was going to be virtual, but now everybody's going to be virtual. That's super important because now the Fed is starting to be affected by the Delta variant. They were going to do this live. Now it's going to be virtual. So that sets a precedence now for any other group of people out there who wants to have a in-person event. Now the thought process is going to be, well, the Fed isn't having an in-person meeting, so we should reconsider ours. Also, the important thing about Thursday is that we get preliminary GDP numbers from the United States and also unemployment claims. So we're going to get the very raw numbers about how either our economy has grown or shrank, in addition to how much our job market has grown or shrank when it comes to people who are unemployed. So all that's going to be coming out. Jackson Hole typically is more private. It definitely would have been really private had it been in person, but now that it's virtual, it might get opened up so that more of the general public can see some of the speeches. But this news from Jackson Hole will be trickling out all day. And that's not just Thursday, it's also Friday. So the biggest thing I want you guys to listen for next week and to take away from anything that you hear from Jackson Hole is the fact that, let's see. So the whole goal for the Fed right now, they wanted to taper their quantitative easing, their stimulus for the economy. They were trying to rein it in. But now, since they're moving Jackson Hole from being in person to online, is that going to now cause the Fed to rethink their decision and think, well, maybe we need to keep this stimulus in place just in case the Delta variant spreads and gets worse and causes more of a burden on the economy? So is the Fed going to shift from what they were talking about this week into something different next week? Just remember, Jerome Powell just spoke. So he's going to be speaking again. Just make sure that, if you didn't listen to him speak this week, just go pull up his speech. It's typed out. If you don't understand everything, find the keywords and look for numbers and stuff around that word. Use the context clues around that word, and then listen to him speak at Jackson Thursday and Friday, and then see if there's any difference there. We'll talk about it as the week goes on. It'll mostly be on Friday when we talk about it. Thursday night, but then Friday as well when we'll talk about it. But just those changes and how the Fed talk is definitely going to change and manipulate, well, not manipulate, but it's going to cause some manipulation in the market because people are going to take what he says and they're run with it. They're literally going to take any little inch he gives and they're going to stretch it into a marathon or two. Friday, more of Jackson Hole, more of Jerome Powell speaking. We get consumer sentiment numbers, we get inflation expectations, and we also get personal consumption expenditure numbers. So like, spending, like how much people are actually out there spending versus earning. And that goes for businesses as well, but mostly personal. So next week is going to be a very interesting week. Starting on Thursday, we're typically not in the market anyway after Wednesday, but for those of you who get a little ballsy, I'm just letting you know, Thursday and Friday are going to be like choppy water out in open sea. So there you go. If you have any questions about that, put the questions that you have in the chat now. If you think of something later, then you can put it in the Telegram group chat. And then I'll make sure to answer those questions because, like I said, Jackson Hole only happens once a year, but it's so super important because the who's who. If you got anything to do with money, controlling money in any sort of way, you're there. So it's going to be super, super important that we stay on top of the news, that we talk about it, that we know who's going to be there, who's dropping out now that it's not, in person, like, to keep track of all of that stuff. So that's what we'll be doing from now until Thursday. Oh, also pay attention to crypto. There's been a lot of money movement in crypto. Coinbase just acquired, I'm going to say acquired, $50 million to put towards their investments. There's been other companies that have like Binance is now getting a little bit more strict with their customer paperwork. A lot of changes happening all over the place. So just make sure you're paying attention to that stuff. And if I think of anything else, I'll drop it in the chat while Mr. Levels is going over technicals. But yeah, I'm gonna go ahead and turn it over to Mr. Levels so that he can go over the technicals for the week. And then if I have anything else to say, I'll bring it up at the end.
Cool deal, cool deal. Appreciate that, Carmen. Let's jump into these technicals. All right, cool deal. So looking back over the week, man, it was a great trading week, man. Another great trading week. In the words of your boy Cali, another one. So we started out the week. I told you guys that I wanted to see the dollar be bearish starting out the week, and then we would see how price react when we got back to these levels in this previous structure. Price popped through there. Told you guys Wednesday that if we held this level here and didn't break back below this previous structure, that more than likely we would see the dollar continue to push up to come back up and retest our level at 93.40. We see that we did indeed get those levels achieved, and we did get some more bullish momentum after we reached those levels. So with that being said, let's look at our currency pairs. Um, we already knowing that our currency pairs move in the opposite direction of the dollar. So we expected for our currency pairs to be bearish this week, starting out the week and retesting previous structure to see how price reacts when it get there. We see price push straight through structure, came back and retested it with a little wick, and then continued to the downside. So trades for Euro USD was beautiful this week. Same thing with GBP USD. Expected to see some kind of reaction here back to this previous structure, then for the continuation to the downside and the retest of this structure and the respect of this structure for the continuation to the downside. And so we see we did get that move for GBP USD as well. That was beautiful. And NZD USD, we see that we did get the down move as well. So that was 3 for 3 for currency pairs this week. Looking at our metals, we did get our down move off of structure that we expected to see out of silver this week. came up, did not break this previous structure. And I told you guys that if we didn't break this previous structure, that I would like to see silver come back down to retest this low. But you see, we haven't quite got there yet. We came back down to retest this low here, and but we're still pushing to the downside. So we'll see how markets open up for the new trading week. Same thing with gold. I told you guys that I wanted to see gold come up and retest this structure here and give us some bearish momentum off of that structure, but we haven't gotten a lot. It just been really kind of slowly selling off sideways, like, but not really giving us any good volatility, which is cool. We'll just wait for the market to do what it do. We see oil had came back down to retest $61. I'm looking for all to give us a major correction to the upside. So we'll see how that opens up for the new trading week. And last but not least, my baby U30. I told you guys that I was bearish for U30 for the week. Um, so we see, I told you guys that I wanted to see U30 come back down and retest previous structures to the downside and fill in this imbalance. And if we broke this level to potentially come back down, fill in this imbalance and this imbalance, we see we almost achieve the whole move to the downside. We got right down here. Previous structure here to fill in this imbalance. So for next week, I'm going to see if we can break back above this structure here. If we cannot, then I would look for U30 to continue to push to the downside to go ahead and fill in the rest of this imbalance and possibly this imbalance here to the downside as well. However, if U30 does open up bullish and we will if we come back down and retest, delete that. If we come back down and retest this previous low right here, this structure, which would be on a smaller time frame, more visible. Um, yeah, so let me get this out here for a second. So we would now be looking here. So we see how the markets open up for the new trading week. If we come back down and hold this previous structure, then y'all already know what time it is. We're going to be targeting this area of liquidity right here to shoot back up, take out that liquidity. We got a little area of imbalance right here that you have to be aware of, have to be able to identify. So if we do come down and retest this structure and we hold this structure, we're going to be targeting this pool of liquidity and potentially filling in this imbalance up here. And then we'll have to see how markets react when we get that move. If not, then we will hold this level and we will continue to push to the downside. So at this time, I'll start the recording and take any questions.